Well, here's a summary of the Tesla earnings call and some of the additional juice and not juice that we got out of the Tesla earnings call. First, we didn't hear the word advertising used once, still no commentary on advertising, though we are starting to see Meet Tesla advertisements. It's pretty cool. Anyway, Elon Musk started out by giving us a heads up that there are going to be some Q3 shutdowns for upgrades. He started off with that and also ended on it, because as soon as he was asked for more detail, Elon's like, let's just move on from this. This is asking for a level of precision we don't have. And then they're like, oh, we're actually out of time. Bye. That was after the stock was down like 4%. Meanwhile, it actually started the earnings call flat. So the juice of the earnings call that really drove it down was Elon's reiteration that, hey, we would rather sell more cars than focus on margin. That's kind of the opposite of what a lot of Tesla investors were used to in years prior, where the focus was, let's get to 30% margin. Yeah, we're making so much money on the cars. Now Elon's like, no, let's get to FSD and make money on that. But the stock market isn't convinced by FSD yet. Though we did get some juicy updates. For example, we got this update that there will be a one-time amnesty opportunity in the third quarter to be able to transfer FSD from a car that you currently own to a new vehicle, sort of a one-time reward to existing members. That basically means if you bought a Tesla, say, in 2017, and you have FSD on that, and now you want to upgrade to a new Tesla, you would be able to transfer what you paid for in that old vehicle to the new vehicle. It's pretty cool. Q3 is July through September, so TBD for details on that. Also surprised they made an announcement on that here. Obviously, the stock market is going to be readily obsessed with Tesla's margin future. However, Elon made it very clear that is a short-term focused outlook, that we should be focusing on the long term, and that in the future, Elon sees a path to a 10x or maybe a 5x for Tesla stock and Tesla's valuation. Another thing that was quite interesting was this idea that Elon wouldn't be focused on Dojo if they could just get their hands on enough NVIDIA chips. Huge shout out there to NVIDIA, and not maybe the nicest pat on the back to the Dojo team, because it's sort of like we only have you because we can't get enough of them. Let's just say if you're the Dojo girlfriend, you're a little like, really? Anyway, by the way, previously Elon Musk has been sort of anti these FSD transfers because obviously that's where he sees that margin boost. Tesla's also, this came as an announcement through the Tesla earnings call. Tesla is in discussions to license full self-driving to a major OEM. OEM is original equipment manufacturer. That would be like a company like Ford and GM. Elon Musk has had discussions with them over the past few weeks here, even conducting Twitter spaces with the CEOs of those companies, so potentially one of those. This is nearly free margin, though you're going to have a lot of Tesla fans who are like, no, I want to be the only FSD out there on the road, or others are saying, well, that's going to take years to deploy. But the reality is FSD licensing doesn't necessarily have to be, here's full self-driving. It could literally be as simple as, here's autopilot. Now just, wobble your, whatever stock you've got in your vehicle twice, and boom, you've got FSD on. Could be something that could happen actually pretty quickly, or I shouldn't say FSD, autopilot on. An autopilot, for most cases, does most of the work and is absolutely phenomenal. Big fan of autopilot, been using it since about 2017, and it would be a massive upgrade to a lot of the ADAS that companies currently have for their sort of lane keep and all of that. The autopilot's just substantially better, easier to use, easier to set up, way fewer buttons to press. I mean, you're going boom, boom, and it's on, as opposed to, setting your speed and trying to adjust your cruise distance and enabling this, and you're not sure if it's on or off. It's a disaster. I've tried ADAS too many times in some of these other cars, and they're just terrible. So, anywho, that'll be quite interesting to see which company ends up announcing that, and it could actually open the door to a lot of FSD revenue, or just even autopilot licensing revenue. That is essentially free margin. Now, of course, there is some risk of vehicle cannibalization here that, okay, well, if somebody can buy a Ford with autopilot, why buy a Tesla? Although I'm not entirely sure that the person who's buying a Ford is interested in buying a Tesla anyway. So I'm not convinced that's a big problem. In fact, I would say this is a massive net positive, especially if you could just start with autopilot. Then you might be able to use existing cameras and sensors and not have to integrate, Tesla cameras and sensors. You just apply autopilot software and slowly collect more training data for not just these other vehicles, but the entire FSD system. Big fan of it. Cybertruck continuing to build release candidates. We actually saw Tesla stock drop about 1% on Elon talking about continuing to build release candidates, which is just a suggestion that they're still working on this. They're not actually in production yet. They're still sort of in that tooling and testing phase. So you saw Tesla drop about 1% on that tooling and testing phase for Cybertruck, even though we still expected this year. Saw Tesla drop 1% to 1.5% on talk that maybe margin isn't that important. Even though Elon says, hey, demand sort of matches production, which is where we want to be, yeah, there's still that potential hint that maybe price cuts could come in the future, though they really danced around that. Not as much optimism as you would have previously heard on previous earnings calls. Cell production up 80% for 4680s from Q1. That's great. Some talk about the value of solar deployments being a little based on what kind of uniform regulation you get throughout the country. Not too optimistic there. On commodities, they continued to see some improvement, as well as improvement from the Inflation Reduction Act. And then, of course, able to balance out their working capital needs a little bit better, helping keep free cash flow up, which is great. There was some joking about how, isn't it great that we can make all of our own SH9T and still be free cash flow positive? Very true, too. But again, a lot of talk about margin, to the point where Elon was starting to get frustrated about this focus on margin, suggesting that, hey, you should focus on the company long-term and not short-term. But unfortunately, the stock market cares about that sort of data. And, excuse me, even though Elon it feels highly confident in Tesla's value long-term, he reiterated his margin warning that you probably don't want to take on a margin loan during manic depressive or volatile or turbulent times in the stock market. A little bit talk on the Optimus, about how there are about 10 Optimus robots at various different stages of production right now. A little bit of bragging about Giga Casting, about how great it is that they can make little micro adjustments to casting using inserts, and they have to replace these inserts anyway as they do wear out over time. But that they can then make easy and micro adjustments to casting inserts to modify their production as needed, and a little bit of bragging about how they're able to, potentially by leading by example, now encourage other people and other companies, that is, to copy the casting model. About Austin and Berlin, you're still seeing Model Y builds that are a bit pricier than per unit than what it costs to build them in other places like Shanghai or Fremont. Stock is down almost 5% now, 4.5%. My expectation was that there was a chance that you would get to a downside of somewhere around, let's see here, if we jump on over to the fibs, we can actually just show the fibs on screen here. There we go. 258 was sort of that downside that I was looking for. That would be a bad report. Looks like right now we're kind of bobbing around here in the 278 level. Not bad. That's a modest adjustment down. That rejects us basically off this longer term trend that we've been on. It puts us back to the ceiling and previous rejection levels where we've been, of somewhere around the 279 level, maybe that 285 level, some volatility there before getting to the 258 level. But yeah, some negativity here, likely driven by margin, nonsense basically, about the brushing off questions about margin. We're getting supercharging, obviously very exciting that you've got so many companies adopting the NACS, North American Charging Standard. Cyber production, they're at the highest units per hour is what they're expecting for any vehicle production ever. So they really think they can systematize the Cybertruck production pretty incredibly, which should help with margin as well, though nobody even knows what the Cybertruck is going to sell for. So some things to pay attention to for Cybertruck. There will be a lot of, obviously, institutional analysis over the next day or so that's going to affect how Tesla stock ends up moving. The little shutdown there at the end, though, about getting to the weeds of the Q3 production shutdown, wasn't something that left, I think, investors with a lot of optimism that Q3 is supposed to be better. But oh well. So overall, I'd say, benign earnings report. Some cool announcements on the FSD transfers and FSD licensing, but really dodgy on margin, suggesting, margin is going to be something we're still dealing with for the next few quarters. we did get commentary on, hey, we just got to get through basically the next few quarters, and then we'll be basically off to the races with how many cars we're able to sell, especially when we get into an interest rate falling environment. So this gives you a little bit of a summary on what happened on the earnings call. Nothing here that I would say is scary, but definitely nothing super exciting to where God is coming down with bags of cash to make the company substantially more profitable. So overall, I'd say kind of what you would expect. A little bit of a give back on the rally that we've gotten for Tesla. Nowhere near as bad as it could have been, though. So I would walk away from this overall kind of like, all right, 4 or 5% give back on the stock after that. No problem. Let's take it from there. So thanks so much for watching. Make sure to remember that you can still get a phenomenal price on those programs on building your wealth between now and next Wednesday. Big price increase. Email us for bundle coupons at staff@meetkevin.com. And you can also email us or check out the website for shadowing options. Course members get a really good deal on shadowing. We just explored some real estate with a course member, and it was a blast, and we'll be doing more of that, so we're pretty excited about exploring real estate with y'all, and can't wait to meet y'all in person. So thank you so much for being here, and we'll see y'all in the next one. Goodbye.
Now, I want you to know this. When it comes to AI, time is what's going to make you money, and if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced